Welcome to this week's edition of Trade the Trend. I'm Jason McIntosh. It is Friday the 24th of September 2021 and I'm bringing you these videos each week discussing the latest developments in the market and some of the opportunities that I'm seeing. And of course this is general advice, so please keep that in mind. It's not tailored specifically to you. So with all that said, let's kick into the first chart. S&P 500. Well geez, what an interesting week it's been. So last week we were talking about the markets when they were just around here. They were sitting right on that 50-day moving average, and well, look, there's no doubt about what's happened from there. So they completely lost their footing, and we've had this heavy fall on Monday. Now it's interesting. Every time we get these sort of like these sharp pullbacks, a lot of nervousness comes into the market. I hear people talking about, oh, look, is this the start of a crash? Are things going to get really bad? But I think it's really important to keep some perspective around this because, look, so far, this is the first 5% pullback we've had since March. So from that perspective, what we're seeing now, look, it's really not out of the ordinary. 5% corrections are pretty, look, they could happen a few times each year. So look, we've become quite accustomed to these moves like this, where the market falls and quickly snaps back, these quick snapback rallies. And well, this one's turning into something a little bit different, and that becomes quite unnerving for a lot of people. Now we've found support's come in at the 100-day moving average, and we've had a really strong bounce off the moving average. So at the moment, it looks a little bit like what we saw back here in March. So if we just have a look at this area, you can see it's the same sort of like accelerated fall down towards the moving average, and then we've had this rebound back up. It's like we've had here, the roll down, then the reflexive bounce off that 100-day moving average. And look, I'm not convinced it's going to play out exactly like this, because it really does. It really does like mirror an earlier period. Every period is different. So it's my feeling is that this could have a bit more in it. It's possible that it's all over and that we're about to see something like this develop. That's entirely possible. That's sort of kind of like what we saw back here in March. That's probably not my base case, so it's possible, but look, my feeling is it's not. I think we need to keep an eye on this support region just down here. Look, what I'll be looking for over the next couple of sessions, or particularly tonight, I'll be watching for one whether we get, if we got a day like that tonight, if we got a down day on Friday in the US that retraced much of yesterday's gain, that would open up the possibility that we're going to retest the low, maybe a bounce off the low, then come back down and test this support zone. So this support zone is down around 4,000, around the 4,200 sort of mark. That could well hold the market, but if it didn't, well then it brings the 200-day moving average into play. So let's just bring that up. So this is a 100-day moving average, the blue line. So I'm just going to change this over, and we'll look at it from a different perspective. Where are we? Inputs. That's the one. So yeah, let's make that a 200. Brings us back down around here. So just drawing across. If we did sort of get a move down to here, around this level, potentially could see a move down there, and that brings in some more supports around there. So look, we don't know exactly how this is going to play out, but just so we know some of the levels, if we keep running from here, that's all good, but there is a chance of some more volatility, creeping in. But look, my key message here is I don't think we're setting up for a crash of any great description, certainly nothing like 2020. I don't think that's happening. Those are low probability events. The odds favour that this pullback is going to be of the 5 to 15% variety. And if it's 5%, well, look, it's already all over. My feeling is there's a bit more to come. We haven't had a 10% pullback for pretty much about a year now. And the 200-day moving average itself is interesting because in a bull market, you often see the 200-day moving average get touched maybe once every year or two. And the moving average, the 200-day moving average, well, if we look back at this, the market hasn't touched it since back in June 2020. So it wouldn't be out of the ordinary to see this come back to the 200-day moving average. So the base case is that the medium-term uptrend is still intact, but we are seeing some sort of a pullback or maybe a larger consolidation within that trend. So having a look at the S&P, let's have a quick look over at the Nasdaq. So look, the key point I want to make on this Nasdaq chart is I'm just going to highlight this section in here. So when I look at this, there's nothing here whatsoever which suggests there's a major topping pattern in place. Now, markets typically don't get to an all-time high and then just fall off the cliff and plummet. It's it's COVID. It did during COVID, but that was a highly unusual and unique situation. Even the 87 stock market crash, people will say, "Oh, look, that just plummeted. It fell 33% overnight, or something like that." But it actually took a little bit longer than that. There was a building phase before the big acceleration down, which took something like 6 weeks. So it didn't actually just open up one day from a high and then plummet. So I don't think we're going to see that happen this time either. That's not to say that we don't get some sort of a big distribution type top maybe develop over the next few months. It's look, maybe, and this is just complete speculation, but it's possible something like this formed over the next few months. You could get like a big topping sort of formation start to take place. That's when you start to look for the possibility of larger declines. But at this stage, I think the base case is that it's this is a pullback within a larger trend. Again, this was interesting. I'm just going to pull back to look. This actually came back to about the 100-day moving average. I won't pop that on the chart. I'll leave the 200-day there at the moment. If this market does start to pull back again, well, then that's going to bring into focus some support. Quite a heavy support region just around here, around 14,200. And if it were to get through that, then you've got the 200-day moving average, and after that you've got these lows from down here, down around these March, April, May lows. They come into focus. So lots of support beneath the market if it does happen to pull back and keep giving back some ground. But look, we just need to see how the next few days play out, and we're going to continue to learn more as this the price action develops. So let's look at the Dow Jones Transportation Average. It's an interesting one. It's look, we looked at this last week, and the formation of note was this wedging pattern that we had, and we were right about here. And so look, the market's come back, and we talked about the possibility of the market coming back to the start of the base of the wedge. And that's exactly what it's done. It's done that. It's bounced. It's right on its 200-day moving average. It's there is some support here, but look, overall it does look quite weak because you can see that 50-day moving average is really rolling over. And I think that when we look at, so if we just go back to the S&P for a sec, we look at the S&P in this phase here during March, where we came back and then we quickly snapped back. Look at the transportations during that same period. They're very different to what they are now. They were up near their highs, whereas now they've been in decline for several months. So I think there's an underlying weaker tone to the market. So one of those reasons I'm thinking that maybe this has a little bit more to play out over the next few weeks. So with that all looked at, time for the local market, the All Ordinaries. Well, look, it's been a big week in the All Ords. So we had these little flagging formations up here, which were clues that there was some weakness developing in the market. And this was the one we were focused on last week in particular. It was, and we're wondering whether that was going to, whether the market was going to fall out of the base of this. And it, well, there, look, there's no doubt about that. It certainly did. And we got our first close behind the 100-day, below the 100-day moving average since, when was it? It was back in November. So I'm just going to switch back over to the 100-day average. And yeah, look, last time was back in November that we closed below the 100-day moving average. And now let's get some support on this chart because it's quite an interesting support level that the market's come back to. Pretty much got to this support level and it's rebounded straight off it. So look, it's that case of buy the dip. It's people become accustomed to, during bull markets, to buying the dip, to buying any pullback in price because they're just conditioned to prices snapping back. So I think that's the reflex action that we've seen here. We've seen the buy the dip come in and support this market. And it's going to be interesting what happens. Just watching it today during Friday, it has been a weaker day. It hasn't been able to build on its strength from Thursday. So look, my feeling is this market isn't out of the woods just yet. I think there's a fair chance we're going to come back and retest this support back around 74.50 where we got down to earlier in the week. And if that were to break, then it brings the 200-day moving average into focus, which is just down around here, where there's some more supports coming in around that level. Last week I told you that I'd put some hedging in place. I put my hedges on. When did I put them on? I put them on. I think it was on Thursday. It might have been here, around here. Put some hedging in place. I've still got it. I haven't closed it out. It's always tempting to sort of close it out when it got down here. It opened really low. There was a good profit in the hedge. But look, the purpose of me hedging part of my portfolio isn't to make a quick profit on the hedge. It's to protect the portfolio just in case something bigger starts to develop. So the hedge is still in place. I'll continue to hold it. At least for now. Look, the market starts getting up around here. I'll probably I'll then look to close it out. But for now, it's still on. Look, I've been saying for a while, I think this is a market to be cautious with. But look, rather than go out there and sell everything like I've heard some people suggest, I think it's a case of exiting your lagging stocks, being selective with your buying, and not using leverage. And that's very much what I've done this week. I've let a couple of lagging stocks go, but I've actually also bought a handful of stocks which were showing relative strength and breaking up. So look, you're getting the entry signals. I think it's always still important to follow those signals and not second guess what the market's going to do. And I think if you can manage your portfolio like that, then there's no need to panic when you do get a down day or a down week, or maybe even a series of down weeks. You've got a plan, you know where your exits are, and you follow that plan accordingly. So just briefly, we'll just have a quick whip around some of these other markets. The Nikkei, we looked at the Nikkei last week, and look, it's an interesting contrast, and it's one of the reasons why I don't think there's a big global decline in the makings. So the Nikkei's broken up from this trend channel about a month ago. And now if we put some retracement levels on this latest advance, it's like it hasn't even got back to the 38.2 yet when we look at the Fibonacci levels. Strong rebound today. This looks like a strong market. This looks like a market that wants to go higher, so it doesn't fit a scenario of a big global slump on the horizon. The Nikkei should be falling into line with everything else. That's what you'd usually expect. And then just jumping over to the emerging markets, again, look, it doesn't look like a market which is about to tumble. Got the support here. Market got close to that a couple of days ago and it's rebounded. I still look at this emerging markets picture and see this as being a big consolidation through through this phase here, and that we've had the strong move up. We're having the sideways consolidation, and that's readying the market for ultimately at some point. That's what I think it's got the potential to do. I wouldn't be positioning for that yet because it hasn't done it. Maybe it does break down, but if it starts to gain momentum and break up at some point, maybe over the next few months, that would be the play I'd be looking at. But look, getting a bit ahead of ourselves with that one, that's not the play for today. So just to wrap up with this week, I thought I'd tell you about an opportunity which I'm keeping a close eye on, and it's in uranium. So uranium is a really interesting play. It's so this is the Sporot Physical Uranium Trust. It's listed in Toronto, but it's a good proxy for the uranium price. So that's why I'm looking at this. So let's look at the weekly chart to gain some perspective before we really get into this. So this is uranium during its last bull cycle. It went from $10 to $140, a huge bull market. But then we've got the big slump. And so what's been interesting over the last few years, probably last 4 years maybe, we've had this big rounding base start to form. And just recently, just in the last couple of weeks, broken up above, you could say there was a big resistance band. You could possibly even say it stretches further back. Look, it kind of runs all the way through there. It's had influence this sort of region, and we had this decisive break higher from it. So it really puts this in play, I think, as a very interesting opportunity. Lots of focus recently on green plays like lithium, but uranium's sort of a play it's a green play which has been setting up in the background. And it's green because nuclear's it's got virtually no emissions when you're using it as an energy source. So it's one of those it could be a really exciting green play in the making. And there's this really exciting story around a supply shortfall. So it's a really interesting setup. There's something like 54 reactors under construction around the world, 450 in the pipeline, and a lack of supply. That's a potential story which is building. So look, the way I'm playing this is through an ETF listed in the US called the NorthShore Global Uranium Mining ETF. And so this is, I got in around here back last year. So this is sort of pullback which I'd look at maybe as a place to add to some positions. And for those who don't have it, look, it's a place where you might even consider putting on a position. So I'm looking at the Fibonacci levels on this pullback. So if we look at that whole rise, the pullback has come back to the 38.2. I think there's probably more. This is going to take a little bit longer to consolidate and pull back, and I think we could well see sort of like a classic sort of corrective move. It's called an ABC or a three-leg correction. It sort of comes like one AB, then down here, something like that for the C. So you get this ABC sort of formation. I think something like that may develop, but then it might then stretch out and become a little bit longer. But look, I think around about this 74 sort of mark is this starts to become interesting as a point to sort of dip the toe in the water for a position here, or maybe even add to a position. On the Australian front, a couple of stocks of interest. One is Paladin. They've got a mine in Namibia, and it's been mothballed during the low price period, but they're bringing it back online. And it's the largest of the Australian listed players. Looking at the Fibonacci's on this, again, we're seeing it come back towards this 50% mark. So on Paladin, it's around about that 75-cent mark. It could be a really interesting point to be looking at that. And just putting Paladin on a weekly chart, just to show like what can go on in this uranium space. This is what happened during the last uranium boom. You can see it went from almost nothing up to close to $10. So and look where we are now. We're barely off the bottom from that perspective. So look, there's no forecasts or predictions that it's going back up here, but even if it ran up to around here, if you can get set around 80 cents, it's still a huge performance, like 400-500%. That's potential over the next maybe the next couple of years. And just lastly, two others which I look at locally are Boss Energy. Actually, it's BOE, I think. There it is, Boss Energy. Again, with this, I'm looking at the for the Fibonacci retracements after that really big run up, coming in around 25 cents, and you can just see this nice little pattern it broke up from. Happened really quickly. It's a low priced and volatile stock. I didn't have my eye on this one, unfortunately, because it was it's a textbook chart pattern. But look, big market, it's hard to be across everything all the time. But nonetheless, this is shaping up as a possible entry opportunity here. And last stock for today. And by the way, look, if you're getting some value out of this, please hit that like button, because it tells YouTube that the videos are worth watching. So YouTube then goes and shows them to other people. So please hit that like button. So deep yellow. Again, look at the Fibonacci's. This is sort of like our guide to where things could pull back to. I'm looking around that 50% mark, so maybe around $1. I'd say this pullback is a bit more in it still. But look, it's an opportunity which is really shaping up as looking interesting. And look, the global markets in general, the S&P 500, the Dow, the All Ords, a lot of interesting things happening this week also. So look, I'm going to leave it there. That's a wrap for this week. Keep your portfolio in good shape. Know where your exits are, but don't be afraid to hold on to those good positions which are in broad upward trends and might just be pulling back. It's all part of the game. Markets pull back as well as advance. So you've got to allow for those pullbacks and not let the noise scare you out of good positions. So find some good trends this week. I'll be back next week to try and put all the pieces together again. And until then, thank you for joining me.